got a small financial update here, just around 5-10 minutes before we move on. The first thing goes without saying, very pleased about the quarter result here with 17% up from last quarter, $8.2 million US. Very strong development across both our businesses. So the accelerator and the Pandion portfolio, seeing continuation of businesses on some of the very large design wins that we announced last year. And as you know, usually Q1 has been a little lower, so we see this as a very strong continuation of what we saw from Q4 2016. Of course, the development is very good, as is also within the guidance of 10 to 20% for the whole year. On the next slide here, just an overview of the profit and loss. Pleased about the fact that we have been growing from 14 towards 16. Also very pleased about that this is a very strong platform coming out of 16 for 2017. We, as I've talked about many times, are super cost focused, and thereby also we have a very solid development in our EBITDA. We'll take a look at that just a little later. Going into our balance sheet, as Napatech have almost no debt, a very strong balance sheet with approximately 80% equity ratio. Also interesting to maybe take a little closer look at our investments in our product development. So the products being developed and completed has actually accumulated in investments to around 76%, which is a number that basically supports all the revenue that we see going on right now. But we continue to do investments in our new products. I'll come back to that a little later. So ongoing products right now represents an investment of around $26 million, million Danish kroner, sorry for that. And actually the development are done both in hardware to support, as Jared talked about before, the 100 gigabit emerging opportunities on the hardware side, but more importantly also large investments in our software around the Pandion network recording opportunities, where we have invested heavily during the last couple of years and continue to do so. And then last but not least, very strong investments in our SmartNIC software and applications that have done over a longer term period, but also are going to increase during the coming period here. So we can say that very strong actually investments also of course causes us to use money. So that's can be seen out of the cash position. But I believe strongly that the use of proceeds for investments is seeding the basis for the growth moving forward, and therefore it's very important. Of course, we also invested in our working capital as our revenue have increased over the last number of years. We always look at the potential opportunities for growing also with acquisitions. So anytime we pull into something new, we would always look at opportunities for that as well. But as such, the 2020 strategy is fully funded in our current business. Take a short look at the gross margin development. It's been fairly stable, around 70% over the last couple of years. We expect that moving towards 68% for 2017. It's basically combined of the amount of hardware and software that we actually sell to our customers, but also the product mix, whether we are talking about low-end products, as Jared refers to as the extra small or the extra large, and of course the amount of volume that our customers buy our products in. And with that, we can actually take a look at a very, very scalable business where we, in full effect here, see the EBITDA as our revenue growth and the costs are fairly stable. We have a highly scalable business. We left 2016 with a 19% EBITDA margin and have guided around 20% for 2017. So with that being said, I'll actually take questions on these just 4 slides here before we move into the next section. Yeah, so Frederik. I think you need a mic here, so.
Thanks. So, just on your Q1 sales, like we saw, we didn't see that many announcements from Napatech in the first quarter, and with regards to orders or design wins, neither in Q4. Can you provide some more details as to what type of demand and for what type of products you're seeing? I mean, is this part of larger rollouts, or is this kind of like a one-off type of deals that you were able to secure in the current quarter?
Yeah, I would say that so just briefly alluded to, I think we are now seeing the effect of some of the larger design wins throughout 2016, which means that we are seeing rollouts at larger customers in data centers, and we are also at the same time seeing some very nice run rate business increases at some of these strategic larger customers that we have been working with under the umbrella of co-creation. We've been talking about that throughout 2016, and I strongly believe that the efforts we have made throughout 2016 with some of these very large strategic customers, as they are industry leaders, they also create a tremendous amount of pull when they start execute on their rollout of products. And I'm absolutely sure that we will have more information on that on the Q1 presentation on the 9th of May here in Oslo again. We had another question down here.
Hello. Two questions. Do you expect the volatility to continue in performance compared to the last quarter last year from going forward now? Because, you know, there were some quarters you do much better than the year before, and some quarters you do much worse. So do you expect more steady performance compared to last year? The second question is, when do you expect to reap the benefits of the investments and tune down investments in product developments so the cash flow can improve significantly?
Yes, I believe that we'll see improved cash flow over 2017. To take the last question first, and on your first question, I think that what we see is that our type of business and nature of business in Napatech will still cause volatility in the order inflow. We see large customers, you know, placing orders in one quarter rather than another quarter, where we have little influence on basically that happening, even maybe at the latter part of the quarter or at the beginning of the quarter. So even though we are working with larger customers where we see some more predictions in run rate business, they are still kind of influenced under the factor that everybody buys, you know, when they need it these days. There are literally few CFOs that allows you to have stock and inventory for longer periods of time. When that is said, we can also now see the benefits, and I'll say that probably that increases over time of some of the channels that we're utilizing, among others, arrows, where we can utilize channels to actually, you know, take some of that volatility out of or at least minimize that for the business. But as we said also in our guidance for 2017, you should still expect to see volatility in the business throughout 2017. That's simply due to the nature of the business we are doing. Yeah, Christoph?
A quick one. A very quick one. In Q3, we saw that you had quite a significant decline in terms of accelerated sales. I was wondering, those 2 to 3 clients that in essence stopped purchasing from you then, have we seen them come back now? So are they back on track, or have you actually sort of seen that decline continue going into 2017? Also, going forward, could we have more information with respect to granularity on Pandion and accelerated sales, please? And thirdly, with respect to
was that a short question?
Yeah, it's a short one. Just wondering, really, cost inflation, OPEX inflation going forward on the back of the fact that you have high ambitions with respect to software development. You need more resources. What should we expect with respect to OPEX? Thank you.
Yeah. So the first one, you say that we've seen, very huge improvements in your delivery towards, one of the customers that we talked about in Q3, so we're very satisfied about that. You could say on the software development side, there's no doubt about that some of the resources we have been using before on some of our product development can actually be diverted towards some of the software development. And also have to remember here that when we talk about software, and I think Jared mentioned that quite good, there's both the FPGA part, which we call software, is really hardware. So say that whether we do that for the high-end part or the extra large part of our accelerators or the extra small part doesn't really make a huge difference from a, you could say, resource point of view. Then there are the other part that is kind of the application engine parts. And do we need more resources there? We might actually do that over time. And as we said before, we of course anticipate an increase in investments and hence resources as we move forward towards our ambition in 2020. And then I forgot your middle question. We'll take that afterwards.
We'll come back to it when you have the other session.
Okay, good. Okay.
Great. Thank you, Henrik.
Lars, welcome.